Kia ora, everyone. Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. Sharesies is a wealth development platform whose purpose is to create financial empowerment for everyone. My name is Frances Cook. I am the investments editor for BusinessDesk. We have a special offer for Sharesies investors from BusinessDesk. If you use the promo code SharedLunch100, or one word, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249, including GST. Now, the offer only applies to new BusinessDesk subscribers, can only be used once per subscriber, and can't be used with any other discounts. Now, before we get started, here's some important information. Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording. Also, just a quick reminder, if you have questions for our guests today, please do submit them through the Ask a Question button down below. Don't leave questions in the discussion area, as they are unfortunately likely to get missed. We don't want to miss them. You guys always put in some great questions. Please do be kind and respectful towards our guest and your fellow viewers. Otherwise, we will unfortunately have to take steps to remove you from the webinar. Today, we're joined by Naomi James. She is the Chief Executive Officer of Channel Infrastructure. She joined the company in 2020 and has overseen a period of major change, which included transitioning refining NZ into Channel Infrastructure and moving the Marsden Point refinery to a fuel import-only model. Welcome, Naomi.
Hi, Frances.
Hi, and thank you so much for coming on. Now, you came in as CEO in 2020, coming from Santos, which is an Australian oil and gas company. Why make the switch, and what differences did you notice coming from that company and also Australia to New Zealand?
So I've worked in commodity businesses for most of my career, originally steel and iron ore and at Santos Oil and Gas, and always in businesses that were needing to go through quite significant structural change as a result of commodity price cycles. At Santos, I had most recently established a new business division for their oil and gas infrastructure, and that was really all focused on how we could maximise the value for shareholders from that infrastructure. And in all these businesses as well, the energy transition was posing new challenges for how these commodity businesses would play a role in decarbonising the economy. So Refining NZ really presented all three of those opportunities. They had a refinery business model that was no longer working for them and needed to change. The company owned critical infrastructure, which its shareholders weren't realising a return from. And it was needing to determine how it was going to contribute to decarbonisation in New Zealand and create a long-term sustainable future for the company. So the combination and complexity of all of those challenges and opportunities really made it something that I was really keen to be a part of. In terms of differences coming to New Zealand from Australia, I came at a pretty unusual time right at the start of the pandemic. And what's really come through to me during that time is just the care that Kiwis have, especially everyone in the Refining NZ team, the care they've had for each other through a pretty challenging time. It's a real family up here at Marsden Point. But there are some cultural changes as well. Kiwis can be a little less direct than Australians, so I've tried to work hard to really make sure we get all the views in the room, which is critical to making good decisions in a situation of really significant change, and also where you've got to bring a lot of people along on the journey.
Yeah, I mean, that strikes me as one of the big challenges that you must be facing at the moment. You know, as you mentioned, you came in, the company was still Refining NZ, now becoming Channel Infrastructure, and we'll get into soon, you know, the nitty-gritty of what that change means. But you've said yourself, you know, the changes currently underway are the biggest in the company's 60-year history. So what is it like to come into an established company and need to decide if changes are needed, then try to lead people through it and really bring them with you on that program of change.
Yeah, so that's absolutely been the last 2 years for us. As a company, we have faced the most difficult operating environment in our 60-year history. When I arrived in April 2020 and started as CEO, we initiated a strategic review, which was really focused on what's the optimal business structure for the company. How do we realise full value from the company's assets to deliver sustainable returns for shareholders through the cycle? And that came off the back of 10 years or more where there'd been below cost of capital returns from refinery operations, as well as making sure we build a really strong and resilient supply chain for New Zealand. And so what that initially led to our strategic review was a simplification of the refinery at the start of 2021. That gave us time to negotiate new long-term agreements with our customers that were also fair for our shareholders. And it also gave us time to prepare for a really well-planned transition, recognising the size and significance of the changes we were making. So we've been working really hard to deliver on that agreed way forward for our business, which was a conversion to a terminal operation. And after a lot of significant planning and preparation, we were able to safely shut down the refinery earlier this year and commence terminal operations here at Marsden Point and to relaunch the company as Channel Infrastructure with this new strategy and plan for the future, which gives it a really, really long-term sustainable plan. But that's been a very fundamental reset to our business and change to our business, very different financial and risk profile that the business has going forward with the long-term contracts we now have in place and a significantly less complex and hazardous operation here at Marsden Point. As well as much lower exposure to energy costs, so to electricity costs, to gas costs, and also by cutting our carbon emissions, making a really significant contribution to New Zealand's decarbonisation as well. So all of those things together have really delivered us a company that now has this long-term sustainable operating model and will allow us to return to the payment of dividends from next year and allow us to really focus on how we can grow the company from here.
Yeah, okay. So walk us through, now that you're Channel Infrastructure, what do you do? What don't you do?
So as was also the case with the refinery, the fuel companies bring in the fuel into New Zealand. So previously they imported all of the crude oil that the refinery was processing. They now bring in all of the refined fuel from refineries around Asia. And so what we do as Channel is we receive that fuel at Marsden Point. We store it, we test it through our laboratory business, and then we distribute it from Marsden Point either into Auckland down the pipeline, 170-kilometre pipeline that runs from Marsden Point to Auckland, or by truck into the Northland region. And those fuel companies are also shareholders of the company. But they these days have a minority shareholding. So we're majority owned by Kiwi and overseas institutions, as well as Kiwi retail shareholders. I think we've got about 1.2% of our register at the moment held by Sharesies investors, and we'd love to see that really grow. So great to have this opportunity today to talk to all our retail shareholders about our new business model.
Yeah, well, exactly. The shareholders have been quite involved in this because it was last year that the shareholders voted to shut down the refinery and convert the refinery into that import-only terminal. So when you were looking at that decision, I mean, there's been a lot of discussion about it. And some said that it had to happen because the amount of money that you could make refinery fell a lot. But of course, there was some pushback from others saying, it meant a loss of skilled jobs in Northland, which is really unfortunate. And there were some who said it potentially risked New Zealand's fuel security. So what do you make of those various arguments, pro and con?
Yeah, so there were certainly lots of things that we had to make sure were considered before we made a decision, and that was really the reason for having an 18-month strategic review process from when we started to look at options for the business through to when we made a final decision in November last year about the future plans for Marsden Point. In terms of the refinery model, the challenge was that we had a structurally challenged refinery here in New Zealand. It is very small by global standards, and we have globally uncompetitive energy costs in New Zealand. So getting a refinery that could work in those circumstances was a real challenge. We were also mindful of the direction we're heading in terms of carbon in New Zealand and the need to reduce our carbon footprint, and also needing to ensure that for our customers we had a really competitive fuel supply chain. So where that took us was ultimately to reach agreement with our customers that the conversion to a terminal was the best way forward, and to secure the support of all of our lenders and our shareholders for that change, and they were all really strongly supportive of that move. It's also, though, been a big part of our process to work really closely with government because of, the importance of the fuel supply chain to any country. And so we've been really supportive of the steps that government has been taking as well as part of this transition, looking at our domestic stockholding policy. And proposing changes there to make sure that we continue to have a really strong and resilient fuel supply chain in New Zealand.
And of course, sticking with those shareholders, I believe Z Energy, BP and Mobil. Now, is it right that they have a 36% shareholding in your business? Forsyth Barr did some quite interesting analysis saying that they believed the changes into your company meant that ZBP Mobil might sell down those holdings. Have you had any indication from them that they're considering that?
No, look, that's really a question for them, rather than for me. And our focus has very much been on making sure we delivered on the agreed way forward. So we've got new long-term contracts now in place with all three of those customers who are obviously really, really great, strong counterparts to have. Those contracts are unconnected with their shareholding. So if there is a change in that in the future, it doesn't have a business impact for us. But those contracts do come with a lot of protection for our business model. So we have fixed and variable fees under those contracts, which are really focused on incentivizing utilisation of our infrastructure. From 2025, we are able to open up the infrastructure to third-party access to the extent we've got capacity. We've got very strong take-or-pay protection in those contracts, and that's set at $90 to $100 million over the first 6 years of those contracts, which really supports funding of conversion costs and allowing time for jet fuel demand to recover from COVID while giving us a really stable revenue and earnings stream and allowing us to return to to payments of dividends to shareholders. And these contracts also have all of the revenue indexed to PPI, which in an inflationary environment is giving us really strong protection, and so especially important at the moment. So the end result of those negotiations with customers and those contracts that were approved and strongly approved by our shareholders is that we've got a business that has really stable earnings, strong cash flow coming through those contracts, and a strong balance sheet position, which allows us to focus on returning to dividend payments to our shareholders next year.
Right. And I mean, the same analysis from Forsyth Barr said they did, see some growth areas for your company. And, what you were saying there about the infrastructure, I mean, they identified, the possibility of providing additional private fuel storage, providing strategic reserves for the government. And the next one, of course, was developing the Maranga solar farm. So do you agree with that analysis? Where do you see the big growth opportunities?
Yeah, look, I think there's a lot of opportunity ahead of us. We have, for obvious reasons, over the last year, been really focused on safely managing the transition that we've been going through, especially because of the workforce changes that it's involved. And so that means a lot of the growth opportunities are ahead of us still. We have already realised some initial growth opportunities over and above the initial contracts we signed with our customers, and they were additional private storage contracts, which give us some additional fixed rental revenue and earnings from the terminal business. So that was a really great early growth opportunity to have realised. But we're working on a range of other things. Some of them you mentioned, Francis. So a number of near-term opportunities for us at Marsden Point. For additional fuel storage, whether that's coming from the government's proposed domestic stock holding policy, which we expect will require additional diesel storage in New Zealand, or from the biofuels mandate that the government is bringing in next year, which will come with additional infrastructure requirements. The Maranga solar project that you mentioned, which is an opportunity for us both to move to a more fully renewable source of electricity for our site, as well as to lock in long-term low-cost electricity supply for our business. Through to some of the longer-term options as the fuel transition plays out, such as sustainable aviation fuel and hydrogen, and things we're working on now to make sure we really can form a view on how the Marsden Point site can play a role and make sure we're a part of those opportunities as the fuel transition plays out.
Yeah, it's interesting, isn't it? Those different fuel types. I mean, how much do you have currently of those alternative fuels? Is that a big part of your business currently? And how much are you hoping to bring that into your business? How long might it take?
Yeah, so that question about timing is the big unknown in terms of that transition. Today, we like New Zealand. It is pretty much wholly mineral fuels, so fossil fuel based fuels, but that is going to change. And so what we see occurring is over time biofuels coming into the mix and having new infrastructure requirements for those fuels and new storage requirements, new blending requirements, new testing requirements. So all things that our business can play a role in supporting. And as well as as petrol demand starts to peak and then decline, that jet fuel demand is forecast to grow. So we expect there to be a change in the mix of fuel demand and utilisation of our infrastructure over time. But with aviation long-term needing a liquid fuel solution, especially for long-haul flights, which really drive the large volumes of jet fuel demand, we see the infrastructure we have as having a long-term role to play. Even as that transition plays out, and we shift from the fossil fuels of today to sustainable aviation fuels, that we can continue to make use and utilise the infrastructure we have. And using what we have today in terms of infrastructure is a really important part of making the transition affordable. Because if we build everything new and separate and additional, it pretty quickly becomes very unaffordable for people. So we've really got to make sure we're looking at how we use all of the infrastructure and capabilities we have today.
Yeah, it's tricky, right? Because, I mean, obviously, climate change, environmental issues, a big concern for many people and for many investors. But as a fuel company, how much room do you have to move on that issue?
Yeah, so climate change has been a really central consideration for us in our decision making, and it was one of the factors that led to the decision to make the changes that we've made. As the new business, as Channel Infrastructure, we chose to make the first thing we did at the start of April the release of our first sustainability report. Ever, which set out at both our roadmap for how we would contribute to decarbonisation into the future, and some real measurable targets to really measure ourselves against as we do that. So the transition that we have already gone through has already delivered a really significant emissions reduction for New Zealand. So our Scope 1 and 2 direct emissions reduced by around 1 million tonnes of CO2 per annum, and that's a bit over 1% of New Zealand's greenhouse gas emissions, so quite material. We also, through the transition, significantly reduced our electricity demand. So our electricity demand dropped by 85%, and we no longer require any gas. And so when you combine all that energy together, that was equivalent to us giving back to the New Zealand energy market equivalent to 3% of New Zealand electricity demand. And so if you think about thermal generation, coal-fired thermal generation being the marginal production, and those markets really being constrained at the moment, reflected in the prices we're seeing, that also delivers a really significant decarbonisation benefit for the country. The other thing that the transition has done is it's opened up where we can now source fuel from. So our customers are able to go to a range of refineries around Asia. They are larger, more modern refineries, and therefore they have lower energy intensity compared to our smaller refinery in New Zealand. And we believe that's going to open up options for them in terms of where they're sourcing fuel from, right across the supply chain. And so we think we've really set a good path there. We aren't stopping there, though, having just gone through that change, and have reflected that in the targets we set. So in the near term, having gone through this really significant change in our business, we recognise that with that emissions reduction that we'd made came a really significant workforce change. And so we've been very committed to a just transition of our workforce, and to reflect that commitment, we set ourselves a target of having at least 90% of our people who were impacted in jobs within 6 months. And we've been working very hard to support all of our staff, and are seeing really great results so far in people finding jobs before they're leaving the refinery and Marsden Point. The next step for us, and our next focus, is on really eliminating the rest of our direct emissions at Marsden Point, which come from our electricity consumption. So that's where we see the Maranga Solar Project coming in, and providing us with a path to decarbonise our own energy consumption, within, and we've set ourselves the goal to do that by 2030. So to get to net zero ourselves by 2030, which is 20 years ahead of the national target of 2050. But then we also recognise we've still got a lot of emissions in this supply chain with the fuel that our infrastructure supports. And so the third target we set was around making sure we're using our infrastructure to support more renewable fuels in the supply chain and bringing down Scope 3 emissions. And so we've really committed to working with our customers to look at how we can utilise the infrastructure we have to support that transition to more renewable fuels, which we expect to occur over time. And whether that's biofuels, sustainable aviation fuels, hydrogen, we see there as being opportunity for Marsden Point to play a role in the broad range of fuel choices that we're going to need to have in the future.
It's really interesting stuff, that, because it's such a complex issue. I will just remind our listeners here, we've got a couple of questions in so far, but only 2. So if you have more questions, chuck them in there. You've got a really high chance of it being asked and answered. This is your time to get your burning questions actually answered for once. I would say, you mentioned their supply chain issues, and another, supply chain issue has been just getting things in. This has been an issue for all sorts of companies, just getting things through the borders, because there have been so many delays and difficulties with shipping recently. So now that you're focused on import, how much of a worry is supply chain issues for your business, and can you address that in any way?
Yeah, so we've obviously, with our customers, with the fuel companies, had a really strong focus on making sure the transition of the supply chain was a really smooth one, and really haven't seen any disruption to international shipping of fuel, either due to COVID or the situation in Ukraine with Russia, and so we're really seeing a very smooth transition to imported fuel through Marsden Point, and made sure that from a New Zealand consumer perspective at the pump, there was no impact coming from those business changes that we were making. So really pleased to have got through that transition and not had no impact for New Zealanders. We do have a really significant program of work underway at Marsden Point, both to decommission the refinery as well as to continue to upgrade our terminal facilities. And we are seeing, like everyone, longer lead times for equipment bringing in, and the constraints that exist in the labour side in New Zealand. So we're working really hard to make sure we're in front of that, ordering things really early, making sure we're well resourced to do the work we have in front of us at Marsden Point, as well as having good contingency in our budgets to be doing those projects at the time we are. So that's going really well, that work. We continue to track to plan and to budget with our conversion project, and our team are really focused on continuing to do that.
Nice. All right. Well, last one from me before we go to audience questions. I mean, looking ahead at the next 12 months, it's always hard to crystal ball gaze, but what are you expecting or hoping to see as a highlight and a possible low light?
Yeah, so look, starting with, I guess, the low light and the challenge, that's probably the workforce transition, and we're right in the middle of that right now, and it just involves a really significant change for our workforce, and we know that's really hard for people. So we've just had this absolute focus on making sure we're doing everything we can to support people who are impacted by giving them a minimum of 6 months notice and 6 months redundancy pay to give everyone sort of at least 12 months to really plan and prepare and get ready, through to a really broad range of transition support as well, to make sure people can find new jobs. And we're seeing great great results from that, but it's still a big change to go through and a really big transition for our community. So that's definitely been one of the lowlights, but absolute focus of mine to support our people, not just to transition our business, but to make sure our people and our community have a good transition as well. I think in terms of what excites me, it's really the growth opportunities we were talking about and how well positioned we are now to diversify what we do in our company, as well as to utilise all of the assets that we have to support New Zealand's changing fuel and energy needs as we go forward. So all those things we were sort of talking about, additional storage at Marsden Point to support fuel security, additional storage to support the transition to biofuels, supporting our own electricity needs, and really locking in some cost savings as well by doing that, and really starting to step down the path of how do we make some of those bigger fuel transitions that need to occur a reality in terms of finding a pathway to sustainable aviation fuel in New Zealand, whether we're manufacturing it here or importing it, but doing that at Marsden Point, as well as some of the longer term fuel options around things like hydrogen. So it's just such a broad range of things and roles that we can play, really reflecting how the future is going to involve a much broader range of energy and fuel choices than the past has, and therefore a lot of opportunities for growth and to diversify what we do and really use all of the great capabilities we have in the really capable team we've got at Channel Infrastructure.
All right, excellent. Well, let's jump into those audience questions. And I would say as well, we've got some great questions coming through. Don't forget to upvote the ones that you guys want to see answered so I know which ones to prioritize. We're going to start with this one from Ollie. Given our need to get off fossil fuels, how will you manage the ramp down of the oil import business? What alternative business, if anything, will you transition Channel Infrastructure to?
Yeah, good question. So what we see happening over time is a change in the mix of fuels that our infrastructure is needing, and while it will shift to more renewable fuels, it continues to need a lot of that infrastructure. And so, taking aviation and obviously, in normal times, tourism is a huge industry for New Zealand, and aviation is hugely important to New Zealand as an island nation. We need to find a sustainable aviation fuel solution, and that is a liquid fuel solution. It can use the same infrastructure we have today, and so we see a really good transition pathway where as that demand for sustainable aviation fuel grows over time, as aviation fuel has been doing for the last 10 years before COVID, that can really replace and offset that decline in petrol as we shift to more electric vehicles. And similarly, as we shift from diesel to biofuel or biodiesel and to hydrogen in the future, using the infrastructure, using the Marsden Point site to support those new fuel requirements, because we're still going to have a need for transport, fuel and energy. We still have a need to move around and get around and source our food and connect with the rest of the world. And so we really are focused on how we use what we have to support those that change in fuel sources that's going to play out.
This one from Fiona is an excellent question, I think, and it looks like a lot of people agree with me as well because there's a lot of upvotes. What employees are needed in your business that is new to your business? If I am a 17-year-old student considering a science or engineering course, what would you recommend?
Oh, that is a terrific question. So, look, I think the really interesting stuff, especially in a science space, is how we're going to utilize transition the system, right? So how do we use what we have to transition to these new fuels? And so technically, we know the fuel transition is possible. We can run cars and run trucks and run planes on renewable fuels and sources of energy. What we don't know yet is how to make it affordable. And therefore available to everyone. And so that is the single biggest problem to solve across the energy transition. It's how to make it affordable, because if we don't do that, we can't make the transition. We can't. It will come at too great a cost for too many people, and to people who can least afford it. And so that's, if I was starting out and thinking about what to study in an engineering space or in a material space, how do we get access to these new feedstocks for energy? And make that affordable to supply the sources of fuel and energy that can replace that really energy-rich fossil fuel that we've used in up to now. That's where I'd be going.
Fantastic. All right. Good luck with that. If you are indeed a 17-year-old thinking about that, Fiona, there you go. There's your steer. Now, I'm going to combine two questions here, one from Neville, one from Ollie, because I think we're going in the same sort of area. Neville says, what is happening to the old infrastructure not being used anymore, combined with what Ollie is asking. Just a few years ago, Refining NZ invested a few $100 million in major infrastructure upgrades. I think it was a new hydro cracker. Are these now stranded assets? So yeah, infrastructure. What's happening with the old stuff?
Yeah, so I guess first of all, we are utilising a lot of what we have at Marsden Point for the terminal, in terms of the jetty, the deep harbour jetty that we have here, a lot of storage capacity we have here, and obviously that really critical infrastructure in the pipeline down to Auckland. But the processing facilities that we're previously refining, we're no longer utilising. And so the plan is we will decommission them, we will make them safe, and then we really want to see what plays out in terms of the opportunities to repurpose Marsden Point. It is a great site for energy storage, production, supply, because it's an industrial site. It's got import and export capacity. It's got very large scale connections to both the electricity grid and the gas pipeline network. And it's got a 30-year resource consent in place. And so all these things make it a really good place for future fuel and energy use. And we really want to see what's going to prove possible before we pull it too much down or out or whatever. We are, though, looking at, and the second question asked about, it wasn't the hydrocracker, it was the platformer, the Te Mahi Hou project that was a recent investment. And we are also looking at whether some of those facilities could be used elsewhere in the world. So that's part of our process as well, looking at whether we can recycle and reuse and sell some of that equipment as well. From a balance sheet perspective, what we have done at the end of last year is written off all of our refining assets. So we have revalued the business as a terminal, reflecting the new business model, and so the value we can realise out of those legacy assets is really upside for our shareholders, and so we hope to be able to do that. We do see a lot of opportunity for repurposing at Marsden Point. We have more than 60% of the Marsden Point site now available and freed up, with no longer operating the refinery. So there's a lot of space and opportunity here to do different things in the future.
All right, we are running close to time, so I'm going to pick the last one based on having the most upvotes. I'm going to assume that is what people are most interested in hearing about. So this one from Colin, with BP, Mobil and Z being main shareholders of Channel Infrastructure, how hard or easy is it for new competition to enter the market without being shut out by the main players? E.g., Gull has to import through Mount Maunganui to compete.
Yeah, so this is a good news story in terms of those new arrangements that we have in place. We made sure that part of the new arrangements was open access. And so from 2025, other customers, including fuel suppliers like Gull, will be able to utilise all of our facilities. That hadn't been the case in the past under the refining agreements. And so that was a really important change that we wanted to make sure we had competitive fuel markets, and we're using our infrastructure to support really competitive markets as well as getting maximum utilisation from our infrastructure. As I mentioned earlier, there's no connection between the commercial arrangements and the shareholding positions. So they don't have a blocking position or any other position in terms of that. And we've really set the commercial structure up so that we are supporting really competitive fuel markets out into the future.
Yeah, excellent. All right. Well, unfortunately, we will have to leave it there. Fascinating chat. Thanks for tuning in, everyone. And a big thank you to Naomi for joining us. We do appreciate your time and your insights. Do stay tuned to our social media channels for news on next week's episode. I've seen a bit of the behind the scenes chat. I think it'll be really interesting. So I think you guys should tune in too. But until then, enjoy the rest of your week. Stay safe.